It was manic Monday on Dalal Street. The Indian stock market faced one of its biggest falls since June 2024. The Sensex fell nearly 4,000 points, while the Nifty 50 slipped below 21,750, dragging down investor confidence. The fall was triggered by fears of a recession in the United States, sparked by a global trade war because of reciprocal tariffs by American President Donald Trump.
It's been a day of superlatives at the stock market. Biggest sell-off since COVID. Steepest weekly decline in years. Longest losing streak in over a year. As FIIs turned relentless sellers, even the DII retaining wall could not hold up. Nifty opened gap down, plunging up to 1,160 points of 5.1%. The BSE Sensex fell nearly 4,000 points before recovering later in trade. Investor wealth of a whopping 19 lakh crore rupees wiped out. All sectors were in the red, led by metal, which was down more than 8.5%. Media, IT, energy and public sector stocks were the other losers. While the root of the chaos is the massive burden of Trump tariff across the globe, other elements have added tadka to the mix. China rattled world market by retaliating with its own 34% tariffs. Beijing's stance that it will not fold under pressure has sparked concern of an all-out global trade war. The trade war is also expected to drive up inflation, shrink corporate profit and hit consumer sentiment. There could be a delay in rate cuts and in the worst case scenario, lead to global recession. Every major stock market around the world was deep in the red on Monday, especially after Trump's comment on bitter medicine.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
Meanwhile, in India, FPIs turned net sellers again in April after turning buyers in the cash segment last month. Till Friday, FPIs had sold off Indian equities worth 13,730 crore rupees. What has added to the concerns is the Nasdaq officially entering bear territory on Friday, falling more than 20% from its recent peak. The sell-off in the market has hit retail investors, but it has also wiped out a considerable fortune of India's richest. According to Forbes, Mukesh Ambani lost $3.2 billion, Gautam Adani $3.4 billion, Savitri Jindal $2.5 billion, and Shiv Nadar $1.2 billion. Meanwhile, investors now have their sights on the RBI rate decision on Wednesday and the earnings season, which begins with TCS on Thursday. Bureau Report, BTTV.
Global financial markets continue to plummet amid fears of a trade war and economic downturn. After striking back at the United States, China has slammed Trump's economic bullying. Germany too has hit out at what it calls nonsense tariffs. Here's how the world is reacting.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
The world is getting a taste of Trump's bitter medicine, and he's showing no signs of reversing course. But there is some pushback. After striking back with a slew of countermeasures, including extra levies of 34% on all US goods, China is calling Trump's tariffs protectionist bullying.
The Chinese government has made its solemn position clear regarding the US abuse of tariffs. The United States, under various pretexts, has imposed tariffs on all its trading partners, including China, which severely infringes upon legitimate rights and interests of other countries, seriously violates the rules of the World Trade Organization, gravely undermines the rule-based multilateral trading system, and disrupts global economic order and stability. The Chinese government strongly condemns and firmly opposes such actions. The US approach is a typical act of unilateralism, protectionism, and economic bullying, which causes harm to others while backfiring on itself.
Europe has reacted with a mix of criticism, economic concern, and calls for unity within the European Union.
Stiamo governando nel momento probabilmente più difficile.
Of course, we did not agree with the choice of the United States, but we are ready to deploy all the instruments, negotiations and economic needed to support our businesses and the sectors that will be penalized.
Germany's economy minister was among the first European officials to voice strong criticism, labeling the US move as dangerous and counterproductive.
Insofern trifft die Argumentation, die Trump...
The argument that Trump uses as the basis for his decision simply does not apply. So we shouldn't get involved in this argument at all. And this is linked to the fact that talk of reciprocal tariffs, that is such countermeasures against advantages that Europe or the world has over the USA, is simply wrong. They are preventive measures. They are isolationist measures that he has taken with serious damage to the global economy. The stock markets are already collapsing and the damage could become even greater.
The US decision to raise tariffs against Europe and the rest of the world is extremely unfortunate, but the EU stands united right now. We're in favor of a negotiated solution, but of course stands ready for countermeasures that are well targeted.
Voices of discontent are also growing louder within the United States. Billionaire fund manager Bill Ackman, who endorsed Donald Trump's run for president, said the US leader was losing the confidence of business leaders and should pause his trade war. Elon Musk himself is pushing for zero tariff zone between US and EU.
I hope that the United States and Europe can establish a very close partnership. We obviously are, there's an alliance already, but I'm hopeful that there can be a very close relationship with America and Europe.
Goldman Sachs has raised the odds of a US recession to 45% from 35%. The second time it has increased its forecast in a week, amid a growing chorus of such predictions by investment banks due to an escalating trade war. At least 7 top investment banks have raised their recession risk forecasts, with JP Morgan putting the odds of a US and global recession at 60%. On fears that the tariffs will not only ignite US inflation, but also spark retaliatory measures from other countries. Bureau Report, India Today.